Hey guys, so I am sorry this video is long overdue, but I've just been traveling a lot and it's been hard to do recording, and I promise that's the main reason that I've not uploaded anything, is purely just it's been inconvenient. I'm in this little van which is not ideal for doing YouTube video recordings. But what I want to talk to you about today, I've been really wanting to make this video for a while. I have now sold my Cineworld position on eToro. I still have my position on the free trade app, which is $300 at the minute, but I consider that sort of lost. And this video is sort of, I now think that the position was wrong, and so I want to talk about why I sold Cine on eToro specifically, what went wrong in this position from my perspective, what some people are still doing to try and get equity. There is an equity group on the Discord. I'll inform you on what they are doing, but I'll also give my thoughts on why I'm not necessarily participating much in that, and yeah, so to get started, why I sold my position on Cineworld on eToro. That's I no longer think that shareholders will get equity. I don't necessarily think that's right. I don't think the business got valued entirely fairly in its motion, in its, I think they valued it based on the pandemic when they should have valued it based on 2019. So that is really upsetting. But ultimately, I think it's going to be a hard fight getting the judge to acknowledge that and create a shareholders equity committee, an SEC, based on getting, trying to get them to acknowledge that the value. But if that's what we'll get into that on what's going on the Discord in the equity committee. Some people are trying to convince the judge that the current bankruptcy filing, the motion to get Cineworld out of bankruptcy, should be dismissed because of an unfair valuation. People are trying to do that, but it's a big uphill battle. And so, yeah, on eToro, I think that's a big uphill battle, and I don't necessarily think they will win. That's not based on morality, that's just based on facts. And so I don't want to subject the people that are copying me to that decision. I think the smartest move financially is to reinvest that money. I saw an opportunity to take it out at just above 1p. Probably should have closed this a lot sooner than I did. Yeah, I got an opportunity to get some money for it. I certainly didn't want to deal with it being delisted. I didn't want the faff of that. Like, the second Cineworld gets delisted, I'm never going to be able to find anyone to buy that, buy those shares off me. So yeah, I wanted to close that position. Didn't want to deal with any headache with regards to delisted shares. And that was in part because I didn't like my free trade. I can just affects me, and I can let that run, and I can go down with the ship on that. But I didn't want to subject my copiers to that. I have to think about their money that they've invested in me. So I've closed it on eToro, where I think I went wrong personally. I think that I invested. I shouldn't have invested money as the information was coming out, and I tried to believe that. I tried to look for signals outside of the company financial statements, the RNSs. So I didn't necessarily ignore the RNSs at all. I read every single one, but I looked for sort of positives in them. And I believed that because our interests were aligned with Mookie's, because he is a 20% stakeholder, that he was going to fight hard to retain equity for retail investors. And so while I believed that there was a chance that we could be screwed, I thought that chance was slimmer than in most Chapter 11 cases. But I think, ignoring that, I think it was wrong for me to continue reinvesting prior to positive outcomes from Chapter 11. I definitely put in some money after the Chapter 11 filings because there was so much information that was coming out that I was reading, and I interpreted it as positive. And I think that I should have held off on that. And I think I can definitely be better in the future at holding off. And what I need to do is create signals from the point that I initially get invested. Once I put the initial investment into there, I should put expectations. I should set expectations as to when I will add more. And so these expectations need to be based on the amount of cash they have spent, and the amount of leverage that they are in, how much debt they have, and what their revenue is and what their free cash flow is. So long as those things improve or meet my expectations, then I can add more. And I think that would have prevented a little bit of the loss here. I don't think it was wrong to enter this position. When I got into it, I think that there was a strong argument that there was going to be a quick return to cinema, and we couldn't have quite, I think it would have been incredible hindsight to have seen exactly the impact that studios creating their own streaming platforms would have had on the amount of films that they released to cinema. The reason it would take incredible insight is because studios have shot themselves in the foot going too heavy on streaming. Disney are experiencing this right now. They're losing members. They're having to take shows off the platform, I think for tax loss harvesting purposes. So you would have had to have predicted that streaming platforms and studios would shoot themselves in the foot, do something stupid that in turn harmed cinema. So, you know, what really studios and studios and streaming platforms should have done is released films in the cinema, which would have helped Cineworld and helped themselves. You had to have predicted that they wouldn't help themselves, which you could have done, but it's a bit of a mad thing to predict that companies will make mistakes. So, this is one of those things. I don't blame myself for picking this stock. What I do blame myself for is potentially not pulling out way sooner and adding more to it on the way down. And I'm going to create a couple of rules for myself that limit my exposure when I think it would be possible for my cognitive dissonance, my cognitive bias, to get in the way of my judgment. So the things that the Discord group are doing as well, and my thoughts on that, these were sent to me ages ago by Ionut, who's done tons of work. And I'm really impressed with everything that Ionut has done. So I want to read out everything that he's done. Really appreciate everything you did to try and get retail investors equity and are still doing. So the first thing is you wrote a letter to the judge, which the judge acknowledged. You wrote letters to media outlets, which is now actually, I'm starting to see media outlets picking up on the shareholders committee and stuff like that. And the fact that retail investors are trying to, it's on Yahoo Finance and it's on a few other sites. So that is interesting. Writing to media outlets does pay off, guys. You wrote an open letter to Cineworld's non-execs. I haven't read that letter, sorry, haven't had time to do that, but you also engaged US law firm Lostein Sandler LLP, the same one who had defeated Cineworld on behalf of Regal dissenting shareholders, had a 9 minutes telco with them, discussion and conclusions attached, and I've got a letter from the law firm who have done their analysis, and what they concluded at the time was that Cineworld shareholders, retail investors, would not get an SEC, a shareholders equity committee. And after a call with the judge, one of you guys got a call specifically with the judge, and he reiterated some of the same comments, which is that you need to prove that the company has significant value so that creditors will get all of their money back and there'll be remaining money for shareholders. And the issue, especially with the letter that you wrote, Cam, but Cam, I'm amazed that you got a call with him and that you did all that work. And like, this is what learning is all about. This is trial and error. You kind of pointed out in your letter that Cineworld shareholders had made a bad mistake buying Cineworld shares, and that the business was that they'd made bad investments. And Cineworld itself had done bad investments, and that is why Cineworld shareholders weren't getting any money. That highlights that creditors won't get all their money back either, but creditors are top of the list of priority, and therefore a shareholder equity committee is not needed. But what the argument that you should have made and could have made, and this is a lesson for the future, and potentially, like, if anyone wants to do any work now, these are my thoughts, and I just want to share them so that if you are going to do any extra work, this is what you need to do. You need to prove that Cineworld is worth its 2019 valuation and more, and that the business will be in future operations in the next year earning what it was in 2019. And based on 2019, the valuation should not be 3 billion. They bought Regal for 3 billion in 2018. So the Regal plus the rest of world business should be worth significantly more than 3 billion with inflation and all of these factors. So the amount of money that the creditors have invested the value of the business is far more than what creditors have put into it, and therefore shareholders should get something. That's just an incredibly difficult argument to make. You're fighting an uphill battle, and you've got all the data, the people that are fighting against you, the banks that want as much of this business as possible, have a lot of data from the last 3 years indicating that Cineworld are not worth what they were in 2019. So you have to fight that uphill battle, and you don't have the most recent financial data. The most recent financial data indicates that Cineworld are losing something like 100 million per quarter. But I do think the business is going to be incredibly profitable in the future. I'm just incredibly sort of agitated by the fact that we won't necessarily get any equity in it for our investment. And I do believe that it is in part on us. We got plenty of warning, and we got given the financial statements, but it's a bit of a sour note that this potentially is ending on. Right, so, and the final things from Ionut, most important, sent a formal objection to the restructuring plan to the bankruptcy court. So yeah, a formal objection has gone to the plan, and I think that plan is still being reviewed, but I exited on the RNS saying that the plan was approved. I think that the plan can still be challenged. If you want to go to the Discord, and there's you can ask to be part of the genuine holders and good intentions group, and so you can be on that, but there's a lot. One of the things I should warn you is if you've lost money on this stock, it's incredibly tempting to believe in hope that you will get something back, and that hope can leave you blind to a lot of facts. The facts is a plan has been approved by the bankruptcy judge. A shareholders equity committee that would be your best chance of fighting this plan has been rejected, and they have gone to the judge has gone to the effort to talk to retail investors and tell them why, and in very sort of kind terms, like he wasn't in no way condescending, and so I think like the most likely outcome, and why I sold my shares on eToro, is shareholders getting nothing. And while that might make you angry, that anger or wanting hope isn't necessarily going to get you any richer. So by all means, I don't want to discourage I just want to make sure that you are aware of the risks, and if you want to do this for the sake of doing it, I don't want to discourage you from taking a big chance and doing what you feel like doing, but my thoughts are that your energy could be better spent elsewhere. Every investment institution has made a few enormous mistakes. Berkshire Hathaway, ironically, the name of the company itself was Warren Buffett's biggest mistake. They bought Berkshire Hathaway, a fashion company. Warren knew nothing about fashion and desperately tried to make it work for years, losing tons of money in unrealized gains, and eventually just used Berkshire Hathaway as a shell company to launch his hedge fund. And so, like, that Berkshire Hathaway, the name itself, is a symbol of one of Warren Buffett's biggest mistakes. And the only way I think that this is truly a failure for you, and the only way it's a failure for me, is if I learn nothing from it. And I feel as though I've learned tons. It's definitely going to influence my positions in the future. It's just that this stock will not go down as a winner for me. I have to say that I was wrong, and I think I was continuously wrong for buying into it, particularly holding it, not necessarily, but I should have sold out sooner, and I'm going to try and learn for that on my future positions. So I'll include a link to the Discord in the description. The Discord in the future, now that I'm sort of sold out of Cineworld, is I want to talk about valuations in certain businesses, what's happening with things like Credit Suisse, and I want to do podcasts where I speak to economists that were forced out of the Bank of England. I want to talk to people that have written books on how to do black box thinking and how to learn from mistakes. I want to do a podcast on how to become a better retail investor, not just for you guys, but for me personally. I want to be learning in front of you guys, and if by doing so, can pass lessons on to other people so that you don't have to learn from your own mistakes, you can learn from other people's and build strategies that will help you grow faster. So yeah, I think it's an exciting time. I'm going to be getting into that back when I get back to Brighton on halfway through August. If you want me to do videos while I'm traveling, let me know what sort of videos you want them to be about on the Discord, and I'll try and fit them in to my time. All right, this video has gone on longer than I thought it would, but thank you so much for watching. Goodbye, guys.